Hello, and welcome to Markets in Focus. My name is Joe Bell, and today I'm going to walk you through some of the most interesting financial market themes that I'm observing. So, a lot of discussion about what the Fed's going to do. The Fed's preferred inflation metric just came out this past week for the month of January, increased by the most in a year, continues to support the narrative of higher for longer. Sentiment. Let's discuss how optimistic or pessimistic investors are. The Investors Intelligence Index showing quite a bit of optimism this past week. And finally, elections coming up, not only for the presidential election, but also the House and the Senate this next year. Let's discuss stock market returns, usually pretty good during split Congresses between the two parties. So, personal consumption expenditures, PCE, right? On the chart here, we have the change in core PCE index. What is that? That's an inflation metric. On the chart here, we have the monthly change. You can see for the month of January, that's excluding food and energy. This is the Fed's preferred metric. Food and energy, very volatile parts of the market, so they exclude that. If you look at the rest of the inflation prices, up 0.4% during the month of January, and relative to 1 year ago, up 2.8%. That's the highest since that we've seen, and by the most in almost a year. And Fed expectations about 2 months ago was for a potential interest rate cut in March. That continues to get pushed out. The Fed has been saying for quite some time 3 rate cuts in 2024. The market is starting to digest and agree with it. Predictions and probabilities are now looking toward summer at the very earliest, perhaps a June rate cut, and markets starting to agree with the Fed with that 3 rate cuts before the end of the year. So a more patient Fed, and this has been their narrative, and the market's kind of hanging in there pretty well overall. One other note, if you look at inflation adjusted consumer spending, just something to watch. We talk about when that soft landing will happen or a hard landing. Consumer spending dropped for the first time in 5 months. Expect a little bit of a drop after that big holiday season, but something to keep an eye on over the next few months and into the summer. Now, sentiment, right? How bullish or bearish are participants? We view that from a contrarian perspective, right? Warren Buffett always says, be greedy when most are fearful, be fearful when most are greedy. Well, people are starting to get a little bit greedy. Okay, U.S. newsletters. This is the Investors Intelligence Bull Bear. It's the Investors Intelligence Sentiment Index. This is an index that tracks investment advisors that publish newsletters, and it surveys and asks them, okay, how are you bullish? Are you bearish? Are you expecting a short-term correction? And on the chart here in the green, we have the percent that responded bullish and the percent that responded bearish. A couple things here, you can see the red line's low and the green line's high. Well, how high? We look back, bullish is getting close to that 60%. You can see there's next to no bears currently. That spread and that bullish percentage, the highest that it's been since the fall of 2021. If you remember, the market ultimately peaked for the S&P 500 in January of 2022. Small mid-cap stocks had already peaked during the second half of 2021. So not on its own a reason to completely sell, but with this strong rally that we've had, starting to see extremely optimistic sentiment from a contrarian point of view, something you want to take a little bit of a pause and perhaps caution here with the strong momentum that we've had. Now, speaking of momentum, speaking of elections, obviously a big presidential election, but also the U.S. House of Representatives and the U.S. Senate, both up for election. And there's some discussion and odds on, if you look at the probabilities, that perhaps the Democrats are going to take one, the Republicans are going to take the other, and we're going to have a split Congress. Very close odds with regard to the presidential election right now. One thing to take note, the markets typically like that gridlock in Washington. They like perhaps the certainty of not a lot of things happening one way or the other. If you look at the average annual performance of the S&P 500 since 1933, the strongest return is when you have Democratic Senate, Republican House, and Democratic President. The second strongest at 13.7%, Republican Senate, Democratic House, and Republican President. So perhaps gridlock in Washington, you don't have that shift in policy and dramatic changes for the good or the bad, but markets, they don't like uncertainty. They like certainty, and I think that gridlock is generally positive for equity markets when you look back historically. So Philadelphia, the end of an era, the dollar dog night, right? That's you pay $1 for one hot dog. It's pretty straightforward. It is very Americana. It's pretty classic around baseball. The Philadelphia Phillies Major League Baseball team is ending that. They're moving to buy one, get one hot dogs. I think it's like two for $5. Why are they doing this? Well, they basically said this is why Philadelphia fans can't have nice things. They were throwing hot dogs at each other. They were starting to see more and more food fights. Surveys for fans were saying it was ruining the experience. Concessions were very crowded. You got to stop throwing the hot dogs if you want to get a dollar hot dog. That's the takeaway for me. So all you MLB fans out there, if you want to keep the dollar hot dog nights, stop throwing them at each other. All right. With that, I want to thank everyone for watching, and I'll see you next time.